Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the S&P 500 here, SPX, and then we're also going to look at the Spider S&P 500, ticker symbol SPY. So first up, let's take a look at SPX here. Yeah, if we look down here at the candles, what we're seeing is it had the triple top type of setup here where it made a top here in October, a top in November, and then you could see the third top here in December. Didn't quite get as high as the previous tops, but it was in the same zone. So in my book, this is the same setup as a triple top, which would be right here, a triple top reversal. You can go to stockcharts.com and you could check it out here. What you don't want to see now is a break below support, okay? And that's what's being tested right now. This is the support break right here. And so in order to confirm this pattern, this triple top, it's going to need to break below this 2633 level. It closed right at this low close from back here in November. Yeah, that was the farthest, the lowest close on this what is a triple bottom type of setup here. You can see there's a bottom in October, a bottom in November, and now a bottom in December at the same level. And so that creates a triple bottom type of pattern. But keep in mind a triple bottom, many times if you look here, these patterns usually form over a 3 to 6 month period, and so the current potential triple bottom, what some people are calling here, which it is hitting this 3 times in a row in the same support zone. This pattern is forming over a matter of weeks and not months, and so in my mind that makes it not as strong of a support level. And so what you want to be watching tomorrow is 2633. Check it out tonight in futures trading. It's coming up here in a few hours, and that's going to be signaling downside risk if it's trading below 2633. And then what you want to watch is 2620. Okay, that's the zone of the low here from here in December. If it breaks below that, I think there's a good chance that it's going to come down here and test this February and April low closes. You can see down here in February there was a low close at 2580, and then the market bounced, and then it came back and it retested that level, and you can see it closed right about the same level back in April. That created a double bottom, and that led to this 6-month rally. Okay, so now it's coming back down. We have this triple bottom and it's testing support. It seems like a lot of people are talking about retesting the lows of the year. And so that, it just seems like that's where the market wants to head. If you look at the lower Bollinger Band here, notice how it's hooking down. It's signaling that it wants to push down lower. And so look for a possible test at 2580 next week. If that level fails to hold, what you could see is a test of the yearly low. That was the bottom of the wick on this candle back in February. That was the low for the entire year. And this is going to be the key support zone to hold. You don't want to see a close, a daily close below 2580. That would be a bearish change in trend, and that would be a signal that the market is heading lower. If it comes down here and hits this 2580, we could see some people buying for a technical bounce and a possible push higher. Now, let's say support holds here at 2633. What you're looking for is a break above this black line. That's the 400-week moving or 400-day simple moving average, and that's at 2656. And so if it starts trading above 2656, that's going to be bullish, and that'll be signaling that it's trying to bounce. And what you look for is a run back up to EMA4 at 2684. Those are the two big levels to break above. Many times stocks in a downtrend will retrace back to EMA4, fail to break that level, and continue lower. Now, if you look up here at RSI, this is the thing that has me a little bit concerned here. The RSI is currently at 3932, and it is hitting a zone where it bounced off of here. You could see right here this bounce in June. Okay, it was off of the same zone, and then there was a bounce back here in the bounce in November. Okay, it was off of the similar around 35 or so on RSI, and so that it's going to need to hold this level of support that it bounced off of twice in the last year in order to get a bounce going before heading lower. Now if it breaks below this support zone here, it could easily come down here to 30 or below 30. You could see that's where it hit on previous levels. You had big bounces back here. The big bounce back in February February, and then if you look at the big bounce back in April, those two big bounces both bounced off of 30 on RSI. And so in my mind, with the way the market is seeming very bearish right now, it seems like we might need to come down there and test that 30 zone in order to get a technical bounce. If it does hit 30, what you want to see is buyers step in and that level hold. Otherwise, it could drop below 30 for a little bit, signaling more downside. Now if you look at Fasto, it did drop down here to 6.47. It is below the 20 oversold line. You know, Fasto does tend to bounce below 20, so you have to look out for a technical bounce, or are we going to see Fasto kind of like here where it stays below 20 for a few days before it actually heads higher. It's done that a couple times. And so, yeah, I think RSI is the big one to watch, and so keep an eye on that indicator. If you look here on this SPX 15-minute chart, you can see it made a low on the 6th, and then it came back up, and it made another low on the 7th at the same level. And so are we going to get a double bottom bounce here, or is support going to break? Write this level down, 2623, okay, 0.92. Basically, yeah, if you start seeing the SPX trading below 2623 and close below that level on the 15-minute chart and start forming candles below that level, that's going to signal downside risk. Now, if it comes up here and it breaks 2645 or 2646, that's going to be bullish, and then it's going to be the big level to break is going to be this 50 simple moving average at 2656. As you can see here on Friday, it got above the 50 simple moving average. It closed above that level on Thursday, and alerts were put out in our chat that this could possibly be the temporary top. It has to hold the 50 simple moving average to remain in play. This pattern formed out across all the indexes. There were many, there was lots of retraces back to that 50 simple moving average in the 15-minute chart. Well, when that level failed to hold here at 10 o'clock, that was the sell signal. It had to stay above that level. So on Friday, when it dropped below, that signaled downside risk. So anybody that was playing this bounce, you had to get out when this broke down. And so now it's all the way back down here. Drop below 2623. You're going to see the market heading lower, possibly test those February lows. If it can break out above 2656, it could possibly come back up and test that 2700 resistance zone. Now let's look at SPY. So check out the spider here. It has the similar pattern with the triple top. You can see the three tops, and as you can see here, the three highs. You can see the highs don't need to be exactly equal, but should be reasonably equivalent to each other. And so that's why, in my mind, this looked like the triple top. They're all at the same zone. Oh yeah, and just real quick, the big level for SPX back here, it failed to hold the 50-day simple moving average. That was the big thing. And now it dropped below all the moving averages. And so right now it's trading below every single moving average on the daily chart, and it's writing EMA4 resistance lower. Yeah, so here on the SPY chart, you could see it's above the 400-day simple moving average. And so you have this 262 level is going to be the big level next week. If it holds 262, it could get a technical bounce going. If it closes below 262, that's going to be a red flag. It will be a red flag if it closes below this low close in November. You could see this green line here. That's the low support level on this possible triple bottom. If support does hold, it could get a triple bottom and try to get a bounce going. So basically below 262 is going to signal downside risk. If it can start trading above 264, it could get a bounce going, and then you're looking for a run back up to EMA4 at 268, and then that 300-day simple moving average at 270, the blue line. 268 and 270 are going to be tough levels to break on any kind of bounce. It's going to have to push through that to get a sustained run going higher. If it drops below 262, what you're likely to see are the lows tested in February and April, and so you could easily see a drop down to 254. The 250, just above 254 there, was the low close of the year back in February, and a lot of people are calling for that level to be tested before a real bounce. Notice that when in February, when the lows were made, there was big volume came in, and so you'd be looking for that here. There's been big volume on this pullback, but is that people exiting the market, or are people starting to try to bottom feed here? Well, we'll know by whether or not 262 holds. If it does come down there and test 254, if 254 fails to hold if it closes below that level, has a daily close below, you could see it come down here and test below 250. The low of the year is down here in the 249s. Okay, so if we look up here at SPY on RSI, you know, to me this is a red flag signaling that it does have a ways to go until oversold levels. It's at 39.73, so it's really far away from that 30 oversold line. And so you know, previous bounces, look at February, look at April, those bounced off of 30. Okay, back here on the big pullback back in October, you know, it was pushing below 30 right here. That signaled the bottom of that drop in October. So at 39, it just signals that the bears could push this lower. It does have a ways to go. There's still a lot of you know, it's not bullish because it's below 50, but it's still not near those oversold levels. Notice this was a level it bounced off of in the past, and so you know, there is a chance that it could bounce here. If you know, ours with Fasto at 6.29, you know, that's at oversold levels. You know, it does tend to try to bounce once it gets down here. So we have to be on the lookout for you know, a technical bounce coming up off of this zone. You know, it has been pulling back for 3 days in a row. We'll just have to see how futures open. My big question now is, what is the catalyst for a bullish move higher? You know, it went from buying every dip in 2000, and you know, for 2017 was a good trade. You buy the dip and then you made money on the bounce, and then now it's flipped over and it's become sell the rip. And so it's been a pain to be able to take profits on or shorting bounces, because the market has been in a bearish downtrend. And so now SPY has a double bottom here on the fifth. This is the 15-minute chart. You can see it made a low here at 11:15 on the 6th, and then it came back down here and retested that level on the 7th. So if you see it break below this 260-250 level and start closing below that level, that's going to signal downside risk. This low closes right around 262.75, and so if that fails to hold, you could see the SPY come down and test those lows from back in February. Now, if this holds, it could get a technical bounce going, and what you'd be looking for is a move above the middle Bollinger Band at 264.94. That's the first key level to break, and then if it can get above the 50 simple moving average, basically at 266, that would be really bullish. Once it turns this 50 simple moving average into support, you could see a run back up here into the 270s. And once again, notice how SPY got above the 50 simple moving average on the 15-minute chart here on Thursday. Closed above that level, and then on Friday it came up and then it failed to hold the blue and black lines. That's the 300 and 400 simple moving averages. Once above, it has to stay above. Dropping below those moving averages signal downside risk, and you could see a big pullback followed. So you have to be really nimble in this market. There is money to be made if you're a frequent trader, but if you're trying to invest, you have to be careful of catching the falling knife, because there could be better entry levels lower. All right, if you'd like to learn more about charts and technical analysis, please come check out the chat. I'll post the video or the link below the video. Thank you.